thought that was a very dispassionate, objective take on the opportunities for us as a country. But now we're going to go to a strategic mineral, one that nobody can argue. The world, after all, still need PGMs. So why don't we listen to really the ugly face of the PGM industry, self-proclaimed, Mr. Valterra. Where are you? Come. In March, clap for him, you can. In March or April, he stood up and he made this bullish bullshit presentation about platinum is back, wah. And I said, dude, you're talking your book. And he had to talk his book because he had an overhang and da. You may have been right. You may have been right. Craig, give us your new take.
Thank you, Bernard. And good afternoon, everybody. So I'd like to just talk about the importance of PGMs, and I think we've spoken a little bit around the critical minerals. Sorry, let me move this. And for me, as Bernard said, we've certainly been speaking for quite some time just in terms of the importance of PGMs, not only to South Africa, but to the world. And I'd like to just expand a little bit on that today. But as Bernard said, it is a privilege to join you today, once again at the Joburg Indaba, this time, and for the first time, as the CEO of Valterra Platinum, as we've successfully demerged. Thank you. Thanks very much. As we successfully demerged from the Anglo-American group. We are a company with deep roots and a renewed purpose to better our world through the value that we look to unearth from the minerals that we mine. The Joburg Indaba has always been a platform where we tackle critical questions facing the South African mining sector. And so today will be no different. And as I said, I'd like to just focus on one of the country's most strategic critical assets, platinum group metals, or as we fondly refer to them as PGMs. As many of you know, South Africa holds almost 80% of the known PGM reserves. Our country is home to unparalleled expertise and resources and has the most integrated processing capacity anywhere in the world. The PGM sector contributes several tens of billions of rands to our economy each year. And it is, at today's prices, and admittedly, Bernard, it's not 2.5 million rand per kilo. It is the PGM sector, yet, I like the way you think. It is the largest contributor to total mining industry sales in South Africa, underlying its central role in our economy. Beyond sales numbers, the PGM industry sustains hundreds of thousands of jobs. Direct employment in the PGM sector is alone estimated at about 175,000 jobs, with a multiplier effect supporting many livelihoods across suppliers, transport, and local service providers. PGMs also contribute around 2.5% to GDP and accounts for approximately 14% of South Africa's export earnings. Through taxes and royalties, our industry is a significant contributor to the national fiscus. And at Valterra Platinum specifically, we proudly employ around 20,000 people directly, support around 9,000 jobs, and contributed 3 billion rand to the South African fiscus last year, which was at the bottom of the PGM basket price. So together with our peers, we are a major contributor to the entire ecosystem within South Africa, both from an economic and a social perspective. So PGMs matter not only for the world, but for South Africa too. They clean the air through catalytic converters. They're vital in key industrial processes, advanced manufacturing, and healthcare, and are critical to the hydrogen economy and remain a symbol of luxury and wealth in both jewelry and investment. This is why I want to affirm that PGMs are not just another commodity. They're a strategic national asset. And for anyone with some platinum bars or platinum coins, I'm certain you'll appreciate them as a strategic personal asset as well, and you'll be even happier with the recent price rise. So today, we have a compelling story to tell our investors. Both physical metal and PGM equities have shown renewed strength this year, with the 5E basket price up 56% in US dollar terms since the start of the year. And we expect this positive momentum and this positive price environment to persist over the medium term, driven by those compelling fundamentals that we spoke about earlier in the year. However, I'd like to be clear. There is no guarantee that the PGM industry will remain the economic powerhouse of South Africa that it is today without some significant steps that we need to take. We must recognize that automotive demand, which underpins 2/3 of our revenue today, faces a long-term threat with the rise of BEVs in the world's major automotive markets. The shift from the internal combustion engines, while more gradual than many had anticipated, is happening. If we, the industry, and the country wish to enjoy another 100 years of relevance and benefit, we must do so, and we must do these 4 key things. First of all, we need to protect what we have: our resource base, our processing capacity, and our skills. We need to produce and invest responsibly, avoiding the boom and the bust cycles. We need to secure the best possible value for the products that we mine. And lastly, and crucially, we need to work together to create the new long-term sustainable demand for our metals, ensuring PGMs remain essential to the technologies of tomorrow. Achieving this requires coordination action from both government and the private sector. Government's role is to support competitive industries by creating conditions for investment and growth, very much to what Richard said earlier. This requires both fiscal and regulatory certainty, coherent policy frameworks, streamlined approvals, and continued reforms of the energy and logistics infrastructure. It also demands a firm stance on crime and illegal mining, an improved municipal performance, and consistent enforcement of the rule of law in our country. These priorities are urgent. South Africa faces real challenges: logistical bottlenecks, unreliable and expensive energy, weak local governance, and delays in authorization processes, all of which undermine investor confidence. Yet these obstacles are not insurmountable, and they're certainly not unique to South Africa. But with focused leadership and coordinated action, South Africa can restore trust, unlock its industrial potential, and strengthen its position in global markets. It is the foundation of competitiveness. It underpins the continued investment in our production base and reassures the global users of our metals that South Africa can offer sustained long-term supply and give them the confidence that they can continue to keep innovating and purchasing our products. Progress is already visible in energy reform, with improvements in generation and now the focus on transmission and distribution. If similar strides can be made in logistics, municipal service delivery, and the regulatory efficiencies, South Africa's competitiveness will be significantly enhanced. It's not just PGMs, though. We sent mining crews underground and into our pits today, secure in the knowledge that all our stakeholders, including government, would work to ensure that we achieve the best possible value for all the products that we mine, including chrome. It's unfair and it's uneconomic to assume that our miners can bear the burden that increased electricity prices have placed on the ferrochrome industry, and that the solution to that is through export taxes and quotas. We produce finished products at Valterra Platinum, fully refined metals in almost all of our cases, and would probably do the same for chrome if it was economically viable to do so. But at today's electricity prices, it's not. And so while we're supportive of the DTIC's ambitions, its current proposals, in our opinion, will result in job losses in a sector which they crucially needed. The private sector role in this whole ecosystem is equally important, and therefore we need to lead responsibly. We must protect our people, our communities, and our environment. We need to invest with discipline, not chasing short-term price swings, but building long-term sustainable value. Reward shareholders fairly and creating opportunities for employees and society. And we must act faster and do more to unlock new uses of our metals. So at Valterra Platinum, we believe market development is as critical as is our production. Our multi-decade resource base demands a multi-decade sustained demand outlook. And we know that demand for PGMs is created through smart and collaborative investment. Hydrogen is a major opportunity, but it's certainly not the whole story. It won't fully replace declining demand for metals such as palladium or rhodium, and we have to look beyond, into medicine, to manufacturing, computing, mobility, and energy sectors in order to sustain that future demand. Our metals are very essential for the future, but to realize that potential, we have to invest boldly, collaborate wisely, and fund opportunities along the entire development cycle. Supporting this innovation and funding the development of future applications in yet-to-be-proven industries is absolutely crucial. So for me, the message is clear. The outlook for PGMs, in terms of demand, is solid. Absent positive intervention, long-term demand will shift. New opportunities are varied and present vast potential. But growth won't be automatic. It has to be earned. Both industry and government need to play their part in improving investor and customer confidence. South Africa, as we know, holds many strengths: world-class ore bodies, a mature labor relations system, globally competitive governance standards, and companies like Valterra. The country has deep expertise and technical skills. And for investors, this is already an extremely compelling case. South Africa's PGM endowment is a gift, but gifts have to be nurtured. The future depends on how we respond to shifting markets, from mobility transitions to industrial resilience. So therefore, securing future demand is an industry-wide imperative and a challenge. Today, we as an industry spend less than 0.5% of our revenue on market development. That doesn't seem like enough in order to sustain our relevance for the decades to come. History will judge us as an industry for what we do in the light of the challenges that we face. As an industry, we talk about this frequently, but I think it's now time to act. We're fortunate that the medium-term fundamentals are strong. That means that we have a chance to invest from a position of strength and not desperation. So to my fellow CEOs in the industry, the time has come to raise our collective investment in market development. Certainly no company can do this alone, but Valterra Platinum will contribute our equitable share and honor our responsibility to secure the future of our industry through our market development activities. And dare I say this, if now is not the time of putting the words into action, when is it? So let's not wait for the world to define our relevance. Let's lead. Let's build the future of PGMs together, because with the right vision, the right partnerships, and the right investments, South Africa's PGMs will power industries of tomorrow as well as define them. Thank you.
Thank you very much, Craig. Thank you. I'm going to ask Nico and Richard to join us for a conversation. Yeah, don't make it awkward. Sit there, and then we force them to sit here with us. Yeah. You're going to have to sit with us.
You got to go here.
Yeah.
You can't go away.
Wish me luck, huh? A geologist, a miner, and a financial guru. And we talk about a topic I know nothing about. So this should be fun. Nico, can I perhaps start with you? Are you taking a similar view as Implats to Valterra on the market, sort of reasonably robust short to medium term? Is that an Implats view at the moment?
I think the two top remarks that he had in his last slide summed it up. I think we similarly have a constructive view over the short to medium term, but I think that there's general consensus that there's demand destruction over the long term, that there's growing surpluses forecast. I mean, that's based on what we know today. What I will say is that I'm never 100% sure about our forecast at any particular point in time. I tend to look at the trends and how it evolves over time, and we had an opportunity to sit with a market specialist recently in preparation for our results, and it's the first time I actually had heard an outside observer who studies the market. When there's a base case with growing surpluses, but under different scenarios, because you have to look at, because I mean we can't predict tsunamis and global war, so we have to look at a range of outcomes. And it's the first time that I sat with an independent market observer where at least there's a case to be made for market balances long term, which is, so as far as I'm concerned, the evolution of the forecast is moving in a very positive direction.
In all the metals, or was this platinum, palladium,
Well,
just to get a bit more granular?
Perhaps less so for palladium and rhodium, but you know, with the interchangeability, you know, it's becoming less of an issue. But specifically for platinum, but if you look at the balance of all three major metals, it was, you know, under certain circumstances, for the first time I've heard someone say that they can forecast a long-term market balance position, which was very constructive.
And so, where we are now, I mean, can we unpack what this means for Implats? And I want to perhaps specifically go to where you are dominant, despite his ambitions in the Western Limb, the sort of Rustenburg area, and Zimbabwe. So can we start with this environment that you foresee, the scenario? How does this impact on you in the areas that you operate?
You want to hear specifically about Zimbabwe or Zimplats?
Zimplats and Rustenburg. I mean, that's where you are very significant.
So maybe let's start off with the Western Limb. The Western Limb was the area that was historically the major source of PGM production. It reached its peak in the late 2000s. We were producing 8.6 million ounces. We invested 40 billion rand per annum at around those days. That has declined. So in 2024, the industry invested 17 billion, so that's more than a 50% drop, and production declined to 5.1. And given the maturity of the Western Limb, that is set to continue as mines mature and come to the end. So if you want to understand the context of our Western Limb operation in Impala, it's pretty similar. However, we have historically produced 1.3 million ounces from Impala. With the transformational transaction that we did a few years ago with the incorporation of Bafokeng, we are now comfortably producing 2 million ounces. It provides 75% of the base load of our mineral processing capacity in Rustenburg, and we can produce 2 million ounces for the next 5 to 8 years, and even for the next 20 years we will be operating at 1.2 million ounces. Now, I know this is not to belittle anyone, but the 1.2 million ounces for the next 20 years, just to put it into perspective, is 20% more than the fourth largest PGM producers producing at the moment. So, you know, people are often critical, or as an observer you can be critical of the Western Limb. It is a fundamentally important jurisdiction for us and part of our asset base, and it's one that we continue to invest in. I mean, it contains our three largest newest projects, 1620 and Styldrift, if you now incorporate Bafokeng. So there's been significant investment from us and Bafokeng recently, and it will continue to be critical to our future. Now, the one thing that I think will be important is our ability to be responsive to market variations. So if I look at the historic production, we mined 1.3 million ounces from 10 shafts. Bafokeng mines 650 from three shafts. One of the fundamental benefits of the construct of our asset is that we will produce a significant part of our production long term, if we had to, from 1620, Styldrift and BRPM, which will give you the bulk of your production at a fairly low cost base. And so I think we have, so in the event that metal prices decline and you're sitting in a low price environment, I think we have got the ability to contract the production base to a lower cost base. On the other hand, if we had to expand production, if, in the unlikely event that we see massive demand through our market development initiatives,
Talk to him about it, not him. He's doing it with you. Talk to him.
But we're going to spend more on it.
Then we still have access to 17 shaft, stale drift 2, and potentially we see incorporation in some future dates. So it provides us with a lot of flexibility for a range of market developments into the future. Sorry, I'm talking a lot now.
No, but I'll come to these guys. I want to hear about Zimbabwe, because I think the three of you are all three there, but you are differently there. You are there by choice and you've invested a lot of money. So where does Zimbabwe fit into your portfolio?
Yeah, so Zimbabwe often is viewed quite critically. For our company, we've had a very successful history over the past 25 years. And from an operational point of view, it's probably the simplest jurisdiction or the simplest asset for us to operate. It's been very predictable, very productive, the lowest cost. It has got policy risk associated with it. And that requires a lot of engagement with government, who is desperate for foreign currency earnings. But all of us are major contributors to the generation of foreign currency in Zimbabwe. So it requires very close cooperation between us and the government. And sometimes it goes through sketchy periods. But I mean, if I just look at, so we often say, if you look ahead, it looks very difficult. But if you look back over the past 25 years, it's actually a resounding success story. And given the geological attractiveness of the Great Dyke compared to what else remains, it also remains a key jurisdiction for us, hence our significant investment in a new concentrator, smelter, solar plant over the last 3 years.
Good, thank you very much. I will later come back to conversations around the collaboration and consolidation at regional level and so on. Welcome. You finally got the job. I never thought Neil was actually going to go away. But, here we are. The unforeseen happened. We got rid of Vroneman. Can I start off where I started with Nico? Do you broadly agree with Valterra's take on the market, the prospects for the market, and how do you then interpret it for your platinum business in Sibanye-Stillwater?
I'm going to commit CEO suicide here by saying I didn't see this market coming where we are today. And to be completely honest, I actually don't fully understand what's driving the very short-term fundamentals in the market. I think it's great that we've seen the run. And I think where it was a year ago was way too low. That was not sustainable when you look at it on a fundamental cost basis. But the reason why it's run so hard and so fast, particularly over the last 3 months, is actually a tricky one to explain, to be completely honest. I think we've been quite open that we're cautiously optimistic that a new base has been set. But what we really see, having driven the market more recently, is more around investment, and arguably probably also a link to precious metals and a pickup from a risk perspective, and obviously risk to dollar. What we haven't yet seen fundamentally is fundamental industrial demand picking up yet. I think there is discussion around possible pickup in jewelry in China. Certainly we've seen it at a manufacturer's level. We haven't yet seen it through feet in the door, so actual retails. So in the short term, I think we've definitely seen a repositioning of the PGM prices. I think that was necessary because it was far too low. But what's fundamentally put it where it is now, for us is still a little bit iffy. It's still being driven largely by investor sentiment in our mind, taking positions. Now, I think optimistic that the new base has been set. I think the medium term for us is certainly a little bit more easy to look at. Again, one of the things that I think certainly we underestimated was thinking tariffs was going to have a significant impact on global macro economics and growth, and then that would be a negative for PGMs, a negative for automobile demand. It actually hasn't happened, not to the extent that we expected, and I think that's a big positive. So I think that could be, quite an exciting one for the short to medium term. And I think we've always said the market was a lot tighter than people thought in terms of surface stockpiles that had been accumulated, post the COVID era. That built up, and we thought that was a lot tighter. So a combination of a bit of a supply shock coming out of South Africa, secondary supply not having come online, stocks being tighter, and global demand sort of, I guess, not having fallen off as quickly as we thought, I think are all very positive triggers for the price. And in the medium term, that's what we see. BEVs, I think as a company, we've always held a strong view that they're not going to grow at the rate that was originally forecast. I think the rates we're seeing now are coming more in line. So, we're pretty bullish on the sort of medium term, and by medium term, I'd say anywhere between 2 to 10 years. Those fundamentals look good. I think beyond that, the discussion around what comes next is a critical one, and that's a key one as to how we look beyond 10 years, and I think that's how we look at it as a company. So we've got a set of assets today that I think for the next 10 years are robust. We've got some excellent organic growth that we can take out of our existing resources, very low capital intensity.
But now don't talk generalities. I want specifics because exciting growth, blah. Let's go to your South African assets.
Yep.
Unpack that for us. This view you take of the future, how does that play out in South Africa? And then we'll get to Stillwater, if you don't mind.
Sure. So specific South African assets today, we're a combination of 3 assets. So today we produce about 1.8 million ounces, purely from South Africa. And if you look at the profile that we have out currently in terms of that, what you'll notice is that we drop down to about, in fact, not too dissimilar to what Nico was mentioning. Over the next 7, 8, 9 years, we drop down to about 1.2 million ounces. Now that was a profile that was put out when we bought these assets in a low price environment. We very intentionally put up a mine plan that did not require significant capital because we couldn't justify it at the time of acquiring these assets. However, I think through a lot of the consolidation we have done, and a key aspect was acquiring the balance of Kroondal from Anglo Platinum, because that allows us to bring Rustenburg and Kroondal together. The synergies of bringing those 3 assets together has allowed us to drop mine boundaries. And today we have 4 projects, that can be developed, brownfields projects. The existing infrastructure is there that we can mine out of. Most of these are shallow mechanized projects off the resources we've got. And if we were to execute all of those, we could comfortably sustain a profile in the region of about 1.5 million ounces for the next 10 to 15 years. So that's the optionality we've got. We're very selected, invested in certain projects through the cycle. K4 in particular was the obvious one. But we have these shallow mechanized projects that we can turn on. And given where we see the market being in the next 10 years, those are likely 4 projects that we will take on because we think they're some of the most, certainly capital cost competitive projects in the industry at the moment. But that's the flexibility we've got with our South African assets. And with that base, we can sustain that for another 20 years at well above 1.2 million ounces if we want to. So South Africa, I think, well consolidated with the resource base that we have.
Then obviously palladium is a byproduct in South Africa and other parts of the world. It is the product. Talk to us about Stillwater. Is that ever going to be viable? Did I say that? I was thinking that. Damn it, I must say. No.
So I won't mention any names to protect him, but I was chatting to somebody last night who made a comment about Stillwater being viable.
Is he still standing? Did you break his nose?
No, he had to come and say, listen, I apologize. When I looked at the numbers, I actually realized just how much money you've made off Stillwater since you've acquired it. And I would urge anybody who really wants to ask about the value of Stillwater to do that. We acquired Stillwater. We've in fact paid it back already through the 1 platinum cycle we've been through, palladium boom that we've been through. So what are we sitting with Stillwater? Well, it's the highest grade PGM asset in the world by about 5 or 6 times. The tails of Stillwater are higher than the head grades of the South African mines, just to put that into perspective.
You must get new metallurgists. You really need metallurgists.
Not only new metallurgists, tailings miners.
Yeah.
But I mean that that puts this asset into perspective. You also we've heard about the endowment in South Africa, which is great from a South African perspective, but from a global perspective, PGMs come from South Africa, Zimbabwe, and Russia. That is a significant risk to the world. And to own the only material asset outside of those three jurisdictions is incredibly strategically important. And yes, it's palladium dominated, but I think as we've seen with technology today, many of these metals are substitutable, and a lot of our market development has been showing that you can balance the basket and substitute metals. So this is a key strategic asset. So to talk numbers and technically how we're managing it, where that business is today, we invested significantly to grow it during the cycle. And we have pulled that back. We believe we can get the costs of Stillwater down to below $1,000 an ounce. So if palladium price is long-term, we think through the cycle that's a comfortable level. And then we're sitting on a world-class asset that's got a 40-year life of mine, strategically important globally, with optionality over the next 40 years that we can hold or expand very quickly if we wanted to. So I think it's an incredibly strategic asset. Getting those costs down, though, is key. We cannot hold a loss-making operation for a sustained
And the
period
other
of time.
thing I read without understanding is the US subsidies that falls away, but it's quite significant amounts that subsidizes the mine in some shape or form, and that falls away. Are you talking about sustainability even once those incentives or subsidies have fallen away?
Yeah, look, and I think just in terms of pure numbers, those subsidies just over the last 2 years that we've got for back payment was 5 billion rand. Show me another PGM asset that made that over the last cycle. That's the benefit of having a supportive government. Now, yes, it was evergreen when it was originally brought out. It now falls away in 2033. But that is essentially a long period of time to really set up an asset from a strategic perspective.
Is there annual number? That's a huge number for the past. Have you got a public domain annual number of that subsidy?
Yes, so it's roughly, it's not roughly, it's 10% of our total costs.
Oh, okay.
So it's we get back in terms of a cash credit. Correct. So it's based on your costs. So looking forward, that's in the region of about $25 million a year. So, in fact, just the value of that alone almost pays for half of what we paid for the asset. That's the kind of support we've got from government. And I think that's the importance of, when we were talking earlier about these regional supply chains and security of protecting local supply chains, that's the kind of numbers we're talking about. So Stillwater for us is a very strategic asset, and I think we've been quite open with the American government to say, we have invested in it. We incurred losses for a few years. We want to do that because it's strategic, but it can't go on forever. So please assist, and they have. What happens in 2033? I think let's see where we are with the asset at that point in time. But it's not our intention to hold an asset relying on government funding and support. Let's be clear. It's got to stand up and be competitive in its own right.
It's a pity you're not a golfer or even an Afrikaner. Otherwise, you could really have swayed the politics in America for us. But hey, we have to work with what we have to work with here. Greg, I want to come to you as an intro into the conversation about the prospects for projects. I jokingly said to your ex-boss that now that you have got the freedom not to just declare dividends, but to invest, the underground, that project every year at every platinum conversation, that is the best project, and everybody sees that, but you've never committed the capital to that. Talk to us about the project, the potential for going underground. Why the hell are you going to call it by another name? That confuses me. Just give us a bit of the background of that project. Is it about to happen now, and what will it do to your company?
Yeah. Thanks, Bernard. So the project that you're talking about is at our world-class asset, Mogalakwena, and it's the Sunslooot underground.
Sunslooot. Why would you brand anything Sunslooot?
Anyway, it's a really good question. I branded the company Valterra, and
I also had comments about that.
Yeah. But I was right. But I'll take on board your feedback around Sunslooot. But I think importantly, we have been looking at what we've termed Mogalakwena, just given its potential. It's by way of background, Mogalakwena, 86-year life in terms of its reserves, extensive resources that the asset has. And we've been really quite focused over the last couple of years in terms of progressing the underground, but doing it in a way that generates value for us as a company as opposed to just pursuing volume. So Earlier this year, we completed the pre-feasibility study for the Sunslooot underground. We've moved that now into the feasibility portion of that, and we look to conclude that by the end of next year, where that's really taking a decision to move forward at the beginning of 2027. And the benefit of the Sunslooot underground is that initially we'd look to mine between 2.5 million tons of high-grade ore. And when we talk about high grade, the open pit today is about 3 grams per ton. The underground's between 4 and 6 grams per ton. So what we can do is we can process that ore through our existing facilities, so it's not building another concentrator or what have you. Process that through the 2 existing concentrators and look to increase Mogalakwena production in the first phase by between 10-20%. And ultimately, the next phase that we can go to is increasing that 2.5 million tons to 4 million tons and increasing its production by another 50%. So really then sustainably growing the underground and blending that with the open pit and creating the most value that we see that we can extract from the mine. Given the market fundamentals that we've spoken about, and particularly around the medium term, that gives us the confidence to be able to invest in that. And if we all work on securing the long-term demand, then we can look at then extending that particular opportunity from Sunslooot. We can do it at Mog South, and then we can continue to do it along the entire breadth of the open pit. And that's where our biggest opportunity is as a standalone company in order to grow our production profile. If the market's not there, then we can certainly, we've got the option, scaling back some of the open pit and then maintaining Mogalakwena production at around about 1 million ounces per year. So we think that's the most efficient way that we can deploy our capital as a company while sustaining our production at both Amandelbult, Mototolo, and then Unki.
Richard, I mean, these side swipes, even I feel them. If we all just contribute to market development, I'm sure he's talking to me, not to you. But I want to actually make the topic a little bit broader. We sit here with 3 significant players, and we sit with lots of people who would talk about their projects, and it's about to happen. We talk about collaboration. From your perspective, where should the PGMs industry in South Africa collaborate more? We can't do price fixing, unfortunately. It's tempting. But apart from that, in the legal space, where our lawyers don't need to be present, what is it that you would want your 2 colleagues and others to do more of in terms of collaboration? And then we know what Craig's going to tell you. Up your expenditure on market development. What your perspective, Sibanye, what is it that we should do more of in collaboration?
Yeah. Let me first comment on the market development.
He's so defensive.
Okay. Listen, I think it's absolutely right, but I take it a step further, though, in terms of market development and the opportunity. I think it's a lot more than just the miners. And to some extent, this has always, I think, been a little bit of where our challenge has been with some of the traditional models, is that supporting market development as miners alone in areas where you don't get good gearing for that investment is difficult and doesn't always make sense. What we forget about the PGM industry is that, frankly, for 30 years we've been spoilt. We've had autocats driving at demand, no customers. They don't have a choice. It was a forced regulated issue, and it sucked up all our demand and growth. So people have been lazy in this area for 30 years. We could have got away with it. But what's been happening in the background is a lot of the fabricators in particular, the Johnson Mattheys, the BASFs, the Rayasis of the world, have been doing a lot of research into this. They just haven't got all the support necessary to take it through, and frankly, they didn't need to because of autocats. What we have to do is get the industry as a whole and our downstream partners, and I think Craig did allude to it in his presentation, which I agree with 100%, and get that collaboration going to truly drive fundamental industrial demand for PGMs, because that's going to be the future and the underpin to it as we move forward. And we are fully supportive of that, and one that we have been doing. I think when it comes to collaboration elsewhere, one of the areas we've got to be conscious of is we're a PGM industry. Our biggest threat is not each other. Our biggest threat is in the short term electric vehicles. That's battery electric vehicles. Ultimately taking out what's been our primary driver for 30 years is going to have an impact. How quickly it's going to have an impact is something we can debate. And I think that there are 2 areas in particular that we can collaborate on. The one is around costs. You know, I think where there's an opportunity to realize synergies, to leverage off existing infrastructure, etc., you know, I think ultimately we're going to be competing against other much bigger issues than necessarily trying to be individually the lowest cost producer and last man standing. You know, I think we've got to look at this from an industry perspective. So wherever there's an opportunity to collaborate and get regional costs down, I think that makes sense for all stakeholders. But the other big one, I think, is really, and again, I have to just lend weight behind what Craig said here. It's about making people aware of how important this industry is and how important it is in South Africa. You know, we need to be collaborating more around, and actually this is some easy stuff, telling the story about the significant impact that we have in communities, about the significant impact that we have, the levers that we pull. This chrome tax, I have to get my 2 cents out there and put my flag in the ground. This chrome tax is a good one. We're debating taxes, we're debating beneficiation. You know, what we're not saying is, and I can't talk for the numbers for colleagues, but Sibanye spends 60 billion a year running our current assets. If you put the multiplier effect of that into the economy, that is when we talk beneficiation, when we talk value uplift, we should be saying, how do we take that money and uplift it? It's 60 billion a year going into the country today. Not a possible beneficiation down the line that we're not competitive in.
My brain got stuck on this chrome tax is a good one. I got stuck there. And then you said lots of things and I'm stuck on. So what is good about the chrome tax? Is it a good example of madness or is it a good example? What is good about it?
It's a good example of madness.
Yeah, okay. No, I thought you were going to say that, but I was waiting and you didn't get to that.
No, I think it's a good example of just
misdirected effort.
Misdirected effort. You know, as a country and as an industry, the impact that we're having in terms of the economy, I mean, we've heard the numbers on impact of GDP, etc. But if you look at the follow-on impacts, we have 1 in 10. One of our employees supports 10 other people. So not just the multiplier on the numbers, 10 other people. So that 150,000 people, we are looking after 2% of this country's population through the mind sitting in this room today. That's significant. And we need to be better leveraging off that. And I think really getting that story out there as an industry, not as individual competitors, to understand the position we fill.
Nico, I want to come to you on the collaboration. I mean, you've been around a bit longer than these two newcomers. Have you had happy collaboration with your neighbors, either current incumbents or previous ones? I mean, is this a collaborative industry, or are we all each one to his own?
No,
where should we collaborate more?
No, I do think, I mean, as PGM players, we have a culture of collaborating over a wide front, and we've also got the various platforms, but not only amongst ourselves, also through MZILA and the Minerals Council with the rest of the industry. So, I mean, I do feel that we are very much aligned on many things. I mean, Neil has done quite a lot in terms of supporting government and coordinating our efforts to, whether it's infrastructure or security, illegal mining. So I think a lot of that is happening. One aspiration that I have, maybe not, I don't want to position it as collaboration, but I would like the industry to be known for an increased responsiveness. I often find that there's very low correlation between price behavior and absolute market fundamentals. We've been in deficit for the last few years, but yet we've seen a price response. And I somehow attribute in part it to the fact that the world believes that we will continue mining no matter what. Yeah. And so certainly an aspiration that I hold for our company, but potentially also for the industry, is that at least there's a perception that develops that we have the ability and the will to follow through on being more responsive, so that you don't wait to buy your PGM ounce tomorrow because you think you'll be able to buy it cheaper.
Don't worry, we've got 10 minutes for questions and I'm in the questions. I want to move on to a question which I'm sure I can name a few people who've put this question to you three guys. How do we unlock refining capacity for junior PGM miners? No, don't look so surprised.
We don't.
Obviously,
we don't.
We don't. I once at a Platinum Day at you and your previous guys on the panel with Nico, and we spoke about how nicely controlled it is. And then we went to the juniors, and they all fantasized about getting access to your tolling plants. Is there, I mean, can we talk about refining? I mean, we sit here with the country's refining capacity.
So, I mean,
Let's start with Nico, and then we'll go to Craig.
Yeah, I mean, so when I joined Implats, I went to our Springs refinery. It's a massive complex. I mean, I don't think it's a simple issue for juniors to erect, well, smelting potentially, but base metal and refining capacity is huge industrial complexes. I do not think it makes sense as an industry, if you want to create efficiency as an industry, to even contemplate a splattering of small inefficient refineries. I think that we have refineries, and I think we have to work the majors with refining capacity, has to collaborate with the juniors in order to get the optimum value share point to make it worth the investment of juniors, or to do it in partnership with the majors. But I don't see any potential for us to develop a large scale splattering of small refineries. I just don't think it's feasible.
So you think the three complexes, or as many as there are the ones the country will have, and managing how everybody gets access to that would be the challenge at the commercial level?
I do not see another outcome, personally.
I mean, my view is that there's no barriers to processing that material today. We process a third of the volume that we produce is processed for third parties. And our position is quite clear. I mean, as we've said, and Nico's just pointed out, processing capacity is hugely capital intensive. We've spoken about the rising cost of electricity. You know, one of the biggest components of cost into that business, into the processing downstreams, is electricity costs. So, you know, provided that we can get the value for processing third-party material, we're open for business, but it has to be for value. And you know, to Nico's point, there is plenty capacity from a refining perspective, but more of the bottleneck is upstream around it. But if you can get the value for it, then that makes sense. But yeah, I think it's important that where you get the scale benefits, that's where you can start to get some of the leverage.
Well, I've been quite open about this before, in that, I see refining as a cost, not necessarily as a strategic benefit. I think it really was a few years ago when you had a much more consolidated industry, and almost controlling or managing the market was more important. So I think we've got plenty of capacity to do it. I think there are some hurdles in terms of where in the market you've got bottlenecks that need to be overcome, which is possibly restricting it a little bit. But I think the capacity there, it obviously has to be commercial. But on that front as well, I think something that we've seen change significantly over the last 5 to 10 years has been capacity that's been built outside of South Africa. So we always just look at the big three here. But I think when you look outside of South Africa, where there's excess capacity that was built for recycling that has not materialized, and we have a lot of spare capacity lying all over the world. And at some point, if we aren't competitive here, I think that will become competitive in a way. Certainly it's been looked at already, and I think those options are growing. So to me, the answer is here. It's got to be commercial, obviously. You've got to get returns on capital. But ultimately, I think it's something that's going to come down to economics at the end of the day.
I want to get to one question which is hovering here in my question timeline. For you, firstly, it is, when are you finally paying dividends again? Okay, we get the answer, not soon. I do want to ask, just briefly, the next few years, are you going to be spending capital on projects in South Africa? And I'm going to ask that of each one of you. I sort of broadly know the answer, but this is let's not talk, let's act. Are you committing capital to growth in South Africa in the PGM industry?
Yeah, we actually are. We are. I mean, I think we've committed through the cycle already on K4. We've got a bit of spend coming there. Middle of this year, we announced or shared with the market that we have made a decision to invest in the first project that joins up the old Kroondal with the old Rustenburg assets, which is new resources. And as I mentioned, we've got 4 or 5 more in the pipeline that will be going to our board over the next 12 to 24 months. And that is to look at how best to sustain our profile. So the answer to that is absolutely. We think they're good resources, and certainly in terms of where we see the market being for the next 10 years, developing some of these is worthwhile, and we're looking at dividends end of the year.
If this was a, you said bullshit. If this was a presidential investment conference, you would have put a number to it. Talk to me about these billions. I mean, the things you spoke about, is this $1 billion, $2 billion, what, just quantum-wise, roughly?
Yeah, I think the beauty with ours is, we're not actually looking at them specifically as individual big project capital spends, because most of these are brownfields. So a lot of them are simply sinking a new access to an ore body, but using all the existing infrastructure, and that's the beauty of them. It's millions of ounces coming to account without all that capital required around it. So, Bernard, over the last few years, we've been spending in the order of, on our South African assets, PGM assets, of about, call it R1 billion odd, in terms of what you could call growth or replacement projects. I think that number will probably sustain, depending what our board approves and when. But it's that sort of, but it's almost sustaining capital as opposed to a whole new project capex.
Nico, you've spent a lot of money in this region between Zim and South Africa. Remind us, you said earlier, and then with this view of the PGM industry, what is your future capital commitment plans, sort of broadly?
Well, so firstly, when you were talking about expanding production, I don't think it's the view of Implats that there's a need for the industry to expand production. So when we refer to capital ambitions, it'll be life extension ambitions rather than expansion. And our capital expenditure reduced from 14 billion in 2024 to 7 billion, and our guidance has been around 8 to 9
per year. I'm just
per
helping him understand big numbers per year.
Yeah, and as part of the reduction, we announced a 50 billion rand capital investment program a number of years ago, and part of the reduction was also attributed to the suspension of some of these projects. Two Rivers Merensky, Phase 2 at Marula, North Hill at Mimosa in Zimbabwe. So I do not think our ambition is to grow production. Our position is to deliver current production for longer and cheaper, and have flexibility to respond to market conditions as they may improve or worsen. So we probably will, through our strategy and investment committee and board, contemplate at current prices the phasing back of some of the projects that we have suspended, but my view is that will happen in a phased approach as opposed to a rapid big bang 20 billion announcement.
And you even beat him with a small token dividend recently. Well done. Nice, thank you as a shareholder. Craig, we know your first 400 million is going to this truck. The truck we are not allowed to speak about. It's your truck, it's my truck, whose truck is it? Can I just have the bloody truck whilst you guys fight with it? Yes. Obviously you've been a serious dividend payer. One would expect you will continue to do that, but you are also contemplating significant capital, just to wrap up the capital conversation, the project.
Yeah, certainly. I think, Bernard, you asked my previous shareholder, how we think through capital allocation. And I have to say that, over the last number of years, we've continued to invest into our business. If you've looked at what we've spent and, through the work that we've done, we spent, anywhere between 18 and 20 odd billion rand on an annual basis in terms of capital investments. And some of that is, just sustaining capital, and some of that was focused around progressing. Sorry, it wasn't meant as a dig or anything.
No, don't worry. I'm
sorry.
I'm rubbing his nose.
But and some of it has been invested in progressing the underground at Mogalakwena. And as I've said, that's a fantastic opportunity for us. So going forward, because we've got well-capitalized assets, because our downstream processing capacity is in good shape, that we'll spend, we'll continue to spend around about 18.5 billion rand on an annual basis from a capital perspective, and that includes spending 1.5–2.5 billion on Mogalakwena underground. And we believe that we can sustain that, and that we can also sustain that balance in terms of value back to shareholders. And so we do have that dividend policy, and we've paid out 40% of earnings, and we've paid out additional dividends to all shareholders that are incredibly happy, and will continue to do that for many years to come.
Ladies, gentlemen, I tried to get to some of the questions, most of the questions. I owe you a lunch. I want to thank the three of you. Thank you very much. This is, when we talk about our industry and we throw around things like sunset industry, obviously we talk about gold, not PGMs. And seriously, I mean, the world, for the moment, requires our PGMs, and it comes from South Africa and Southern Africa, and you heard it from the horse's mouth. So, thank you, gentlemen.
Thank you very much.
Thank you, everybody.